afternoon. Today is August 2nd, 2017, and I just wanted to really just explain what I meant about Snapchat. And so essentially, what we're looking at right now is the Snapchat chart from a daily perspective. Um, this is around the time that it went IPO over here somewhere, right? Let me see if I can move this over a little bit. Huh? That's that. So um, this is kind of the open over here somewhere. Open up at 23 some odd dollars, and then the high point was 29. 29. Let's see here. High point was 29.44. You can see that on the screen. $29.44. So I saw people. Number one, I always tell people that, hey, look, if you're not part of the original, investment bank tranche that got in, that has to have that $500,000 to be an accredited investor and additional money to invest in IPOs, then when these things actually do hit the public market, you're paying a premium. So whereas they got in, they bought in at $17, but they had a lockup period where they couldn't sell for a certain amount of time. Still, when it opened, it was open at 23 some odd dollars. So they made the money between 17 and 13. I mean 17 and 23. Market shot up to $29. People were buying all in this area, in this 25, 26, 29. I just thought it was going to keep going. And so much advice on social media about buying Snapchat. And so the general rule of thumb here is to stay away from IPOs until they establish a trend. And looking at Snapchat, I mean, look at it. This is the price right here, right now, $12.64. Remember, the investors, the ones who got in early, were at $17 and some change. I don't know the exact figure, but it was in the $17 range. And so the point I want to make is, first, let me draw this really quick. This is the pattern of a downtrend. The market goes down, and then it goes up, and then it goes down. You can see that pattern here. Down, up a little bit, down. And so the point that I'm making is that lower can always become lower. So when people say, well, I'm buying, buy low and sell high, this isn't real estate. This is, this can always become lower. This can go to 10. What makes it stop? What makes the analogy I used was that, do you want to pick up pennies in front of a train, or would you pick up pennies in front of a train? And if this train is headed south, why should the train stop when you decide to buy? Why should it stop at $12.64? Why should it stop at $10? Why should it stop at $9? So it's people who got in, who bought at $17 thinking, oh, it can't go below $17 because that's when the original investors got in. Well, look at it now. It's at $12.64. So lower can always become lower is the thing, right? And so what you generally want to wait for is for a trend to develop going back the other direction. And here is an example of that, right? So looking at this right here, this is a trend going up. So what's in motion continues to go, and the what's in motion generally continues to go in that direction. Excuse me, I'm a little under the weather, but that's it. So this is the Dow Jones. I mean, it's making new highs, right? So this is an industrial ETF, but it mirrors the Dow Jones. So this continues to go up. You can see that same pattern, up, down, up, down, up. What's going to prevent this from continuing to go up? It can just continue to go up and continue to go up like it's been doing over here. It may come down a little bit, but it's going to continue to go up until it starts going down. So the point that I really wanted to make was that you got to be careful about saying And people have got to be careful about saying, hey, man, it's a good time to buy, because lower can always become lower. So I hope this is helpful in helping people think about how the markets actually work, and what may be a bargain opportunity. And let me say this, and then I'll wrap up. If the broader market, meaning all the major companies, if they start to tank, everything starts to tank like 2009, yes, there are going to be a tremendous amount of bargain opportunities. And when I mean bargain opportunities, I mean the only time I would actually look at fundamental prices. I mean fundamental things like how much cash a company has on the balance sheets. When are the officers buying the stock back? Um, Things like that. But that time will come, like 2009, but it's not here yet. So you got to be careful about what some people call bottom picking stocks, because lower can always become lower. So anyway, I hope this is helpful, and I'll try to keep these coming. All right, cheers.